Breaking news, the Bank of Canada hikes the benchmark interest rate to 1%, which is the biggest one-time increase in central bank's rate since 2000. They hiked up by 50 basis points to 1%. And of course, their reasoning is that the inflation rate is much too high for Canada's liking. It's about 5%, above 5% right now. This is like compared to, in March, it was 5.7%. This is compared to the US. In America, their inflation rate is running really hot at 8.5%. And if you're at the age of 41 or younger, that's literally the highest inflation you've ever experienced in your life. So we are in unprecedented times here. And this is due to a variety of factors that we'll talk about. But this is just out. The Bank of Canada is raising its interest rates. So the bank's rate impacts Canadian businesses and consumers by influencing the rates they pay and receive on things like mortgages, general income, and savings account (GICs). The bank slashed its rate to barely above zero in March of 2020 when the pandemic began. And then, of course, inflation has become roaring back. So it was basically at 0% for the longest time before now shooting back up. So if you have a mortgage, you live in Canada, and it's variable rate mortgage, yeah, expect to pay a lot more on your mortgage payments. And I think that this is the first move in a series of tightening measures that will mean that some people, they bought houses, especially in such a tight housing market. Canada even went as far as to Trudeau banned foreign buyers of Canadian property. And because it's ridiculously expensive to buy a house right now, and you have a variable rate mortgage, I think a lot of people might even default on their mortgage, and house prices might come, maybe not crashing down, but there might be a correction in house prices. And that's why I'm personally waiting before potentially maybe swooping in and buying a house. So yeah, a lot of things are going on here where I see that, you look at the move in the markets. I mean, they're probably applauding this move, but at the same time, like the TSX, it's up 2.6% year to date, mainly because the TSX has a lot of energy companies, and they have done incredibly well. But if you look at the S&P 500 index, year to date, it's down by 8%, and that's America's largest 500 companies. So, yeah, and if you look at the consumer price index for March in the US, like I said, it increased 8.5%, the largest year-over-year jump since December 1981. And of course, the US is doing similar things where they're hiking the interest rates. And I mean, just look at this ridiculous inflation. So I actually think that March is maybe the peak where we'll see inflation. And if supply chains smooth out, and especially if the amount of grains and food that we can get out of Ukraine increases, we could potentially see lower inflation, as well as energy prices are also starting to come back down to earth. And that's the main reason why the CPI was so high. So energy prices rose significantly and accounted, I think, for over half of the increase in CPI, up 11% month over month and 32% year over year. That's why the TSX is doing, I mean, only like 2% so far year to date, because it's focused so heavily on energy prices or on energy companies, because Canada is a very energy rich country. Economists had warned about the large surge due to the major oil price spike in early March related to the Russia-Ukraine war. Shelter costs increased 0.5% compared with the prior month, and 5% on an annual basis. So that's the main reason why energy, I would say, is the main reason why CPI rose, although there are some promising signs, such as lower cost of used vehicles, that hopefully, like I said, March is the peak of consumer price index, but 8.5% is just ridiculous. So I just wanted to share with you, if you're Canadian like I am, this might hit if you have a line of credit, if you have a variable rate mortgage, even companies within Canada, on any debt, they'll have to increase their payments on their debt because now interest rates are higher. So let me know what you think of this move. I think it's needed in order to tame the inflation rate down. And yeah, I'd love to know your thoughts. Take good care of yourself, stay safe, and yeah, peace out. So feel free to like this video, subscribe for more up-to-date content, and I'll see you in the next one.